Welcome back. I can turn my volume up a bit. It's Monday and no red folder. Yeah. The red folder doesn't necessarily affect my decision making too much. It's important to see though, if I'm in a position and there's, red folder say coming out at 10 and I don't know that it's coming out at 10, that it's just important to know why prices if it does just explode or something, know why it's exploding. Another thing too is just general activity in the market. It's like I'm using this red folder. It's like, okay, if there's no red folder, I'm going to anticipate that it's going to be lower activity today. And so would I want to put more or less risk on, if there's more or less activity, right? That's the kind of thing I ask myself. Of course, combined with everything else that I'm seeing. So too much activity can actually be something I've noticed you just end up kind of consolidating. But activity, by that I mean volume, and call it 15-minute chunks. So how many contracts are being traded over a bigger period of time, like 15 minutes. So I keep track of that. That's what this volume data is. This is the relative volume. So I keep a 30-day rolling average volume from 9:30, 9:45, and 9:45 to 10. It's not it's not the most important thing, to be honest, but it is something I like to just pay attention to see okay, this movement going on. Is there overall high activity in the market now, or is this generally compared to how it's been, right? Compared to how it's been over the past 30 days, is this pretty low? If it's really low, I mean, depending on the quality of the setup, I may actually not even get in. So again, it depends though. It depends on the quality of the setup. So, but with that, yeah, I'm just gonna get to it. And it seems like with this way of trading, much better way of trading, it seems like I'm able to actually explain more without, it's there's a lot less to pay attention to. So, I'm not as oh, I need complete, silence and, well, I need to be complete. What I mean is I need to be completely silent, and I don't need that anymore. But still periods of it for sure. So I think that, it looks like I'll be able to explain more, which will be nice. Just completely quiet. Yeah, whatever works though, that's what's most important. So whatever works. Yeah, I tell myself that all the time. So whatever works is really all that matters. But anyway, I'll get right to it. So I'll just explain like a bit of where I'm at, I guess, with it is in terms of liquidity. I see a very um, yeah, I would say I see a very clear gradient towards like this area in here. So what I mean by gradient is like we've taken out a lot of highs with lows. Let me say it differently. There's been a lot of highs created that have taken liquidity, and there's a lot of lows created that have not taken liquidity. So they're low resistance. So you have high resistance to low resistance. This London low is high resistance, and it's within a H4 for rag. It clearly looks like a market maker buy model, but there's no I don't see any reason why it would still wouldn't, potentially if you're to look at like a range, come back into discount, anything like that. But this in here, especially, it's very close, but even this as well, very clear draws on liquidity. This not as much, this London low. This one, there's much more resistance to it. With that being said, is there manipulation after the open? This is a 928 high, prices manipulating after the open. Now is there displacement? As long as I can put my stop loss, as well, first like I said, as long as there's displacement towards this low resistance from high resistance, that shows me that okay, there's something going on here. And as long as I can put my stop loss at a high resistance level with displacement as well from it, then I am, and there's risk reward, then I'm in for a trade for sure. So there's a few aspects. It's very simple, but still definitely a few aspects to it. It's not bearish yet, but who knows? There's plenty of times where I think the market will just keep going up. I'm not gonna fail flip it though in that sense. Like I just find that illogical. The way I see a fail flip now is more like for example, this is all-time high up in here, right? Yeah. So if there was like low resistance, a lot of low resistance up here, and maybe these were high resistance. Well, if we took this out, you have this high resistance to high resistance. Okay, likely going to move up to low resistance. And you just think of like flow, right? Flow over anything. It's the way that I think about it. So, okay. Trading view. So this is where I'll point this out, and this is I find this very interesting, and it's very logical why this is the case, right? So like right now for this first 15 minutes, the volume is 28,000 when the average right now is 99,000. This would be an example where I'm not taking a trade and unless like some serious displacement come in, because we call this pre-FOMC or whatever. Really, what it is very simple. It's that there is no level here. All price is doing is trading into no level right now. How can a lot of interaction occur or volume occur, right? If there is no level being traded into. So, very, very low volume. People trading, trend lines and moving averages are likely, making something off of this. But again, like this type of volume disparity is like extreme. And it makes, I mean, it's a Monday no red folder, but like it is a fourth. It's about well, we'll see how it plays out, but it could be a third of the average volume, which is insane. So this is a case where what I would then say to myself is, okay, if there's a very low volume right now, what needs to happen is I need to see a lot of people get obliterated, basically, because there's a lot of people who are, you can think of it like low level, who are in this, and they all need to be wrong, basically, is a way of thinking about it. So, we'll see what goes on there, but yeah, very, very, very low volume, very low volume. Like, and to me, it makes perfect sense. Like, low volume, right? We have a lot of people entering where there's no liquidity, we could say. A lot of like these people, this low volume, I mean, very little liquidity. There's all, it's all-time high. There's nothing looking left. There's very few orders. What people can enter with very low liquidity? Those are smaller people, smaller participants, right? So when I see this, where all we're doing is creating high resistance liquidity by taking out highs and have all of this low resistance liquidity and don't go to it, that is like what I would define as a low probability market. And you can see that again in this volume. It's extremely low volume. So that's just the way that I view that. But I have a feeling we'll see some more manipulation going on, and it might end up like interacting with this liquidity, but it might just do nothing really today. But I guess keep going up on low volume. I wanted to talk a bit about statistics. And since I almost certainly will not take a trade today, the volume is just extremely low. But again, if something violent happens, that would be what I might take a trade on. But so getting funded, you do not need to be a profitable trader to get funded. In fact, funding is a pretty much like a statistical certainty if you take enough trades, and I would say have even some resemblance of a process. But even completely random, just buy and sell with a fixed 2R, I mean, would likely, I would, I'd have to do the math with like just a guess of a win rate. Say it's like 15% win rate. You're still going to, if you take enough trades, you're going to have an extension from that mean win rate of 20%, and you'll have a run of maybe 3 or 4 winning trades. And if you risk if you risk a lot on that, you'd get funded easily. Okay, what is this? Okay. So the point of that is that you don't have to be profitable to get funded. And I've been funded a lot. I've been funded $50,000. I've been funded $1 million. I've been funded $500,000. And it is, and I want to just make this like super clear, like funding is simulation and it means nothing. Absolutely nothing. Funding is fake. And when I say fake, like it is fake money. You are not getting money. All you're getting is that, potential of money in your head. And random results that then lead to funding, right? I want you to imagine that you're trading and you lose most of the time, but then suddenly something incredible happens and you start winning, and you're like, this is why I'm winning. This is why I'm winning. And you get funded. And then what happens? You blow all your accounts. And you do that every time because it's a statistical certainty that you're going to do that because you were never profitable in the first place. This is very important. You were never profitable in the first place. All you experienced was an extension from the mean, and what you then experienced in losing your accounts is a regression back to the mean. Regression to the mean is an extremely important concept in trading and in the universe, just in everything. Regression to the mean is a very, very important concept to understand. You could have a 20% win rate. There's likely going to be 2 weeks out of the year where you have a 60% win rate. And you're going to think you're going to look at those 2 weeks. They're going to be like, and I know every single one of you, if you even are listening to this, know exactly what I'm talking about. If you've been in this game for any more than just say like a few months, where it's like for a couple weeks, this thing is working perfectly. And you are rationalizing all of these reasons why it's working so well. And then what happens? Then it stops working. And instead of, owning the more heart-wrenching reality that you were never profitable in the first place and you actually have no idea what you're doing, you say things like, I broke my rules. I have FOMO. I have this, I have that. Because it's much easier to blame something like that than to realize that you were never profitable in the first place. That realization is almost like because you're so attached to it, it's like your dreams and everything just gets sucked away from you. And it's this very dark place. until you break out of that and realize it's not dark at all, you just have to learn and figure out what you're doing. And that's the process that I'm in right now, because so many times, I have been a part of random results. And of course, with random results come the statistical certainty, basically, of extensions and getting good results. And then it all stopped working. And doing that process over and over again. And do you know where that happens the most? Not even the most, like where extensions and regressions are the most, we'll say, violent. And it's in mechanical strategies, because they're purely random results. Because that mean is fixed. And so mechanical strategies, if you trade any mechanical strategy, if you trade it long enough, you will get funded, but you will not make money. Very important. You will get funded with statistical certainty. You will get funded if you stick to it, but you will not make money. With a little lower probability than funding, you might make a payout. Are we here to make one payout a year? Or, like, I wouldn't say a year. Like, you'll probably make like one payout ever. It's the extensions can be big, and especially if you risk higher. So if you risk a lot, this is very important. The more you risk, the higher the probability you will get funded and make a payout off of random results. But the more that you risk, the more accounts you're going to blow. You never will get out of this cycle unless you make your results not random. Very important. This cycle will never end unless your results become not random. And you can trade any system you like, any mechanical system you like. And I'm on this like journey. I'm doing a lot of back testing of a lot of mechanical strategies, because I believe fully that mechanical trading does not work. And I believe fully that discretionary trading, as a day trader, your discretion is the only way to make results not random. To not have random results. And everybody, but I got funded. Maybe I got a payout on this. It's like, yeah, but you won't make money. You will not make money over time with this. Over many, many trades, you will not make money. You will lose. This is a business where, again, right, it's like many, many trades. You might make a few payouts. You will lose in your business. You will lose, right? Because rent's going to be due. Food's going to be, needed. Health insurance. You don't work for somebody anymore. Health insurance, car insurance. If you have a kid, oh my. If you have a few kids, you need money, right? And you need it to not be random. It doesn't matter if some months you don't make any money, but 9 months out of the year, you should probably be making money. And 6 months out of those 9, you should probably be making a lot of money. Your stop loss should be something that is not hit very often. And a losing week should be something that is very rare to you. When we start talking like this, we're like, oh, but there's no way that this strategy is going to achieve that for you. That's correct, and that's why you'll never win in this. And again, these are the conversations I have with myself. That's why I'm sharing them. I have these conversations with myself every day, these types of conversations. It's like, what is actually going to win in this game? You have to get rid of the random results. But to then go back to, this is where addiction comes in. This is very important. When you have random results, and you have these random runs that occur, what does that create? It creates something called intermittent positive reinforcement. So you get these dopamine hits at times that you're not able to predict. And so what that leads to is trading addiction. And you're getting this fix by trading these strategies that create random results, by just trading in general in a way that creates random results. You're going to get, it's like, it does end up messing with you. And again, you get that intermittent positive reinforcement where you get very attached to these strategies because you saw it won, or it won for a week, or it won for 2 weeks, and you got funded. You will be very, very attached to that strategy, and it will affect your judgment heavily. I've had this happen at least 5 times. It's very, very important. Like, I have gone through a lot of strategies, and it's not due to, you call strategy hopping. I mean, it's because they stopped working, and it's because I experienced an extension and I experienced a regression. It's very, very important. I experienced an extension and I experienced a regression. And in the end, I realized a lot of these strategies I've traded are mechanical. I can backtest them. Oh, they actually don't work. Very hard realization, but it's an important one. So trading addiction is very real in that. And it's these random rewards that create this trading addiction. So I think there's honestly, I do believe if we're to talk about like self-sabotage, which is another one of these things that I think is just like, we like, FOMO, greed, not greed. I mean, I don't even know. Like, just FOMO is a big one. Like, not following your rules, self-sabotage. I'll tell you, like, with just straight up, like, real talk, you have a mental illness if you like, you are literally, like, the definition of insanity. You are insane if you know what works. Like, it does actually work. And you have the goal of it working, and then you don't do it. Like, you do something else. That is literally insanity. I do not believe people are insane. You would have to have a mental illness to do that. It's not logical. So this concept that people just break their rules, have FOMO, and do, like they know what works. They tell themselves they know what works, because the truth of them actually having no idea how to make money in this game is much more heartbreaking and gut-wrenching and scary, terrifying, actually, because you're going to be stuck in the rat race your entire life. It's much more gut-wrenching than to just say you're insane. This is very, 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 very important, because every single person who is not made it in trading yet is going through exactly this. I'm just like being real. And I'm looking forward to sharing this from a point of making a lot of money from trading. I'm very much looking forward to sharing this. And I will not give up on this. But the reason why I'm sharing this as I go is just for that truth aspect. It's for that truth aspect. So, it might feel like everybody's winning too. This is very important. Again, random results will produce extensions and regressions from the mean. Not everybody is winning. We'll call it 97.5% of people are losing. The middle 95% is losing. The bottom 2.5% isn't even capable of participating. And the top 2.5% is winning. So 97.5%. So when you say everybody's winning and I'm losing, you're wrong. And you're statistically very, very, very wrong. What you're noticing is people temporarily hitting a streak, a statistical certainty streak. They're hitting a streak. And what you can be certain of is that it will regress. In the 97.5%, it will regress. And what you can also be certain of, well, I shouldn't say certain of, but what you can, be more confident for people who actually win is that that won't regress. Because they actually don't have random results. They actually win. It's very important. Very, very important. It's a victimizing and lack of responsibility saying that everybody's winning and I'm losing. No, that is factually incorrect. Completely the other spectrum. Super, super important. What is factually correct is that if you were to grab 100 people, I shouldn't say 100 people, there's going to be a margin of error on that if we're being precise here. But in the, like, think of it in just, we'll say this. If you grab 1,000 people, traders, understand that probably 950 of them or more are failing. You're not even gonna be able to see the profitable trades. It's just like the whole group is, right? It's pretty abysmal. And so this is where, and I was talking to a fellow trader about this, and this is where I had the realization. Now ask those 950 traders, really listen to this. Why does the market move? Ask them, why does the market move? They will not have an answer for you. Yet we're day traders. We capitalize off of market movement. And yet we, 95, 97%, don't even know why the market moves. The word is abysmal. It is really bad. Okay? And it's no coincidence that nobody, I shouldn't say it like that because that is a lie. It's no coincidence that 97.5% of people lose if they don't know why the market moves. You have to know why the market moves. And so for me, that's why I have been focusing so heavily now on liquidity, right? I'm moving towards trying for this. It's like this system for me is a way of conceptualizing the very, very basic dynamics of bid and ask, aggressive and passive players coming together and transacting. And so this is the way that I'm going about this so that I can actually apply it. And you could say that any strategy really is you applying that. And it's like, that's okay, whatever, but it's not true. The person trading any mechanical strategy really is not, they're not aware of what this means in terms of the market and the logic behind it or anything like that. So for me, what I'm bringing myself to do now is like just focus completely on what actually moves the market, and then how do I apply this in the market, basically? How do I actually now capitalize off of knowing how the market moves? Repeatably, right, with my discretion. It's very challenging, but I do believe it's simple, so that's why I'm keeping it simple. I'm going to say it again. If you were to look at those 950 traders and you were to look them in the eye and ask them, why does the market move? They would not be able to tell you. And that is insane. That is actually insane. Why does the market move? Why is that not like, why is that not the number one searched, question in the day trading industry? Why does the market move? It's strategy to make, $1 million. Easy money. It's horrible. It is actually horrible. There's also an intense laziness in the trading industry as well. I've realized this too. It's not the trading industry. The trading industry is no different than any other industry. This is the difference though. So like, first off, I believe that 95% of people fail in any industry. It's just that they're capable of bringing in money while failing still. So that person at their 9 to 5, right? They're signed on, contract for this position. And, okay, they could get fired if they do like absolutely horrible work, sure, right? But like, it's unlikely, even if they're low performing, that they're going to be fired. I do believe that, And you can make it look like you're not low performing. You tried so hard, this and that. And it's like employment only cares about how hard you try. So you can actually still bring in that monthly income while being low level in a 9 to 5. And that's why so many people do. The thing with trading, though, is that it's the 95% are incapable of bringing in money because this game is fully results based. So because of that, you actually have to transcend the 95% to even make $1. Or let's say this, like you could statistically, like I was saying about one payout or, very low money, and you won't win over many trades in your business. But like to actually like make a consistent dollar, you have to transcend the 95%. And if you are to make a consistent dollar, you are a millionaire. Like snap the finger, literally. It's a very important concept. Trading is almost like very binary. You either make no money or you make money. And it's because it's results based. So just look at any job. There's extreme laziness, and the same applies to trading, right? That's why I was saying I don't think it's that trading alone is that. I just think that it's very the problems of the person become very apparent because to make any money in this game, you have to be utterly exceptional. And let me say it differently. To make any money means you will make a lot of money. It's just to make money in this game, you have to be utterly exceptional. So exceptional. 2.5% exceptional, right? Super important. Super, super important. So yeah, definitely no trade today. I mean, look at this price action. I'm gonna get off right now. So it's been a third of the volume. I mean, it may actually be intelligent not even to trade until Wednesday, but we'll see. I don't really think like that. It's like, again, I'll come into the market and see, what is the volume like. This is so retail. That's the only way to describe it. Very low volume. All low resistance is not being taken except for right here. Tons of high resistance being created here. It's just, trend line, channels, everything playing out just right today. So for the people who, trade that kind of thing, that's okay. There's plenty of people like that who actually will make money too. That's the irony. Again, it's as long as they're discretionary, you can trade anything and potentially make money. But it has to be discretionary. So that is, I'm trying to think if there's anything else to say. I'm going to start actually titling these videos too. Yeah, I'm going to start titling these videos. Instead of just the date and live trading. I mean, it is what it is, but because this one's more of like a talk. I just yeah. Trying to think if there's anything else. Yeah, I think I covered most of it. Yeah. All right. Well, price is curling over a bit right now. I won't lie, but I mean, volume is so low. I'll just see if there's like some violent displacement or something. I potentially would enter, but Just gonna see. Maybe have to be low risk and yeah. Now, like I said, I'm gonna get off. That's where I have to use my discretion on that. So